What? Here we are. All right, guys. Good morning. It is November 5th, 2018. Hope you all had a fantastic weekend. I'm going to be streaming here this morning for an hour or so, and then I'll be moving away. For the trend biases and economic reports to begin the day, last night at 4:30 a.m. East Coast time, Great Britain Services PMI at 9:10, Bank of Canada Governor Polaz's speech, and then after the bell at 10:45, Market Services PMI at 11 a.m., ISM Manufacturing PMI, and at 12:30 we're gonna have the 3-month bill auction and the 6-month bill auction. Trend biases of the prior day: ES, Nasdaq, Dow, all bearish. Russell was bullish, and then the overnight we have a neutral bias for all 4 indexes. On the shorter term time frame, the ES is neutral, Nasdaq neutral, Dow neutral, Russell bullish, and on the midterm 15 to 20 day period, bearish ES, bearish Nasdaq, bearish Dow, neutral Russell, and on the longer term time frame view of 20 to 60 days, all 4 indexes are currently bearish. For earnings, nothing too major this week. Last week we obviously had the larger earnings events coming out of Facebook and Apple. But this week there's nothing too big that I can highlight here this morning. We'll move on to our previous day's summary for the S&P 500 here. Let's see. I'll pull that up. Our bell-to-bell high in the S&P 500 on the prior day, 27.56 half, and the bell-to-bell low down at 26.99 half. Settlement was 27.24.25, and then the value area high all the way up at 27.43.75 with value area low at 27.12 half. Point of control coming in at 27.19.75, and the European close at 27.22. Volume on the session, 2,297,000 contracts. Overnight highs so far here, 27.29 half. Overnight low, 27.12.75. Pretty tight overnight range compared to what we've relatively been seeing. Floor trader levels, pivot points, support and resistance. R4A 28.38 quarter, R3 28.11, R2 27.83.75, R1 27.54. Pivot point for the day comes in at 27.26.75, S1 26.97, S2 26.69.75, S3 26.40, and S4A 26.10 quarter. For our 10-day range analysis, guys, the previous day, 57-point range, which is right in line with our median at 56.5. Session 66.75, median 65. Overnight 43.5, median 33.75. First hour is 22.25. So prior day, pretty much right in line of what we have been seeing, but so far this overnight range is pretty tight. Index strength percentage change today is Monday. So one of the things we always like to kind of point out, last week, guys, strongest market was the Russell by far, almost up double the rest of the markets as far as a percentage change basis, leading the way up 3.94% over the last 5 days, followed by the S&P and the Dow, roughly up 2% apiece, and then the Nasdaq was the lagger, only up 1.26%. However, on Friday, Nasdaq was down 1.38%. Russell was up, and the S&P and Dow were both down. But the important thing here, guys, Russell did lead our way lower on a 20-day, or I should say on a 60-day cash basis. The Russell is the worst performer, so it's kind of catching up to the rest of these markets here and did perform the best last week. We'll see if that continues this week, but just something to keep in note here. So let's go ahead. I'm just going to quickly check any comments here that anybody's made. Okay, cool. Go ahead and take a look at these indexes. I do think, first of all, I don't have much of a bias on either way for these indexes. The biggest thing, I want to start once again with all of the currencies here. CL oil, I will start with first. Now, oil came into a major level on Friday. We have dipped quite a bit here, but I do want to talk about that first thing this morning. Since 2017, the summer basically of July, there was this 5029 anchor, or actually it's 50, let me just double check. It's actually 5043. Is that correct? Yeah, 5043 is the anchor, which is the high going back here to the end of July. This high to high sequence has been bid every single time we've traded it. Our most recent high of the year is actually a negative 61.8% completion. So we were holding this extension, completed targets. It's negative 23 here in May. On that same anchor new high sequence right here, initially traded its 38% retracement in August. We made a marginal new high, and we have pulled back to the 50% level, as well as a retest at the beginning of the rally in April. So we're coming into some major supports levels at 62.85. Now oil has been absolutely just shut down over the last 4 weeks, just consistently large bars trading to the downside. This is one of the major levels of support. I had this up last week and was anticipating it. Now, the last real larger time frame halfway back I had that traded was the high going back to Friday, October 19th to low. That 50% retracement traded through its negative 23% profit target. There is a possible low of the 23rd of October, low to low extension here that could be coming into play that I want to pay attention to. That 38% retracement is 63.75, 63.75, and the 50% retracement is 64.13. However, if we do not hold that, it is a low to low extension. So I want to mark up both that 50% and 38% retracement. We will, if these levels do not hold, we will come full halfway back from the traditional, so the high of the 28th of October to low. And honestly, that is what I'm thinking is a possibility of happening this week, is a retest of the breakdown. The beginning of the level, the breakdown on Thursday lines up with the level on Tuesday. So this 65.28 is a major level of resistance that I'm watching. Because this 62.85 is a weekly level of support for me, I'm paying very, very close attention to it, but you can see the pinch indicator is just firing. So I am looking for potential longs, halfway backs from the low of the day to the high of the day here. I actually prefer this trade today. 63.07 is that level right now, so we'll see if we can pull back. I'm going to set that alert. What I would like the oil market to do is actually pull back into the area it broke out of, the full halfway back for the day right now, as well as the beginning of this move up before trading higher. So that is a trade I am going to be looking for, and probably one of my favorite setups here today for oil. And then as far as the other thing I'm looking for is the halfway back from last week on Wednesday, or no, that was Monday. That 65.28. So those are my two trade locations and looking for potentially to trade right now. Now, gold had a very large rally on Thursday of last week, and what I would like to do is participate in the low of Wednesday to high. Right now that level is 126.2. There is an extension in front of that level, which is where we're currently catching our bid, but we have broken down below the prior day low and through that level. So unless you did buy that extension on the first test, there is no trade. So there's no second test here. One of the things, there's two things I'll look for here. One, a move down to 1226. Okay, that would be a potential setup here today. Now, if we do not move down to 1226 and instead rally from this position, I would like to confirm this by breaking back above the 61.8% line from the high of Thursday. That level would be 1235. If we break back above 1235 here, that would confirm a long bias, and then I would look for a pullback. So either moving down till 1226 or moving back above 1236, and then looking for pullbacks are the two situations I'm looking for here in gold today. Now, if we hold our current sequence where we do break above that 1236, then our upside profit targets would lead us back to the highs of last week on the 26th when we really began breaking down. But as a reminder, guys, and this is something we can look for this week, gold is at, in my opinion, a very, very higher time frame inflection point. If we can start closing above this 1238 level, which would be the highest close in a very long time, I really think gold can begin a very aggressive trend higher. This thing has just been in a very large consolidation. I do think if we can get above that 1238, that it's possible we begin trading back to the top of the range near 1340, so roughly 100-point rally in gold, which is pretty significant. It's been a while since we've seen that, but you know, a lot of times into the end of the year you do get bigger moves at the beginning and end of the year. You can see here at the end of the year of 2017, big move, end of the year to the downside 2016, and then as the year rolled over, we got another big move, and then go back to 2015. As soon as the basically the market had opened for the year 2015, I mean, gold had this. I mean, look at these bars. These, you know, that's a 100-point rally, or no, that's a 60-point rally in the following month, or the following week at a 100-point rally. So 160 points in 2 weeks. So for whatever reason, just seems like towards the end of the year, you know, gold begins to move. Not specifically one direction or the other, but that's just something we've seen. So that's why I'm going into the end of 2018 here. It's something I'm paying attention to. Let's move on to the indexes here. We definitely have a two-sided trade. Load up some studies here. So we had a little bit of bearish biases. Obviously, on the higher time frame, we have bearish biases here. Oh no, my studies are missing here. So I want to talk about some of the higher time frame levels that are a possibility of us running into. Now, we had two levels of support on Friday. The first one did catch a little bit of a bid, but then we broke through and went to our second level of support. These levels have not changed from Friday. Now, what I was looking at was the low of Tuesday too high. That's going to continue to carry over here today. That is a 2,700 quarter. Okay, and I'm just going to bring that over a few days. Also, there's a possibility we get a full halfway back from last week's low on Monday to high, which is going to line up with the 61.8. So that's down at 26.84. I'm just going to set an alert there. Be aware of that level 26.84. So those are the two support levels below that I have. I'm going to mark them both up with alerts, 2,700 quarter and then that 26.84. I don't want to chase anything up here right now. We have a very aggressive move down from the Friday session, and that should absolutely be respected. We took out overnight lows. We took out the Thursday low. So there is a possibility of a halfway back short here acting as our resistance level. So that's going to be 27.3275, and I'll set an alert there as well. And then really you want to go to the top side of the range, and I'm just going to mark it up right here, the low before we broke down up near 27.53. If we get up towards 27.5375 here today, I would definitely expect that to be a zone of sellers. That is a leg start lower here in the S&P 500. So whether we get up there today or tomorrow, that would be a zone I would consider to be resistance based on the way we broke down from that level. And then also just remember, we do have that higher time frame halfway back that we want to be aware of at 27.69, which is also above. So two-sided trade here. I wouldn't be stuck to any one side or the other, but those are the levels I'm looking at. For the Russell, the most bullish market last week, one of the things I want to pay attention to is, guys, when we really start breaking down here, I haven't talked about this too much, is removing the extended session. So actually turning off the extended session and focusing only on the regular trading hours session. That's where a lot of the volume's coming in. So if we look at the Russell, on Friday, we had the 1557 resistance level trade at open. It was great. Still want to respect that 1557 here. That's 7 points above where we're currently trading. And then to the upside, based out of the lows that came last Monday, there was this halfway back using the RTH only, and then 1501.7 to high extension sequence. 1538 and 1531 are a support. So I'm looking for a ping pong match between 1557 and 1538 here today with a possible touch of 1531. Alert all of those levels. All right, moving on to the NASDAQ. Once again, I'm going to take off the extended session here. The NASDAQ pierced this 61.8 of the extension. So one of the things I want to watch is there's two sequences here. One is just the full halfway back using the extended session turned off. So the high of Friday to that low, that level is 7,001. Okay, so I want to set an alert there. That would be resistance that I would anticipate first thing here this morning. If we trade back up into that and start getting below this 69.44, NASDAQ is definitely one of the weaker markets here. I see the possibility of us trading back down into 68.36 half here if we can't take out these highs. That's the full halfway back from the low of Monday. So be aware of that 68.36 half level right now. That'll bring us very close to a gap fill from the gap up of Wednesday, as well as just pull a full halfway back, which is completely normal. If you look at where this market's been, it's consolidation Wednesday. Even though we did rally Thursday, we didn't really break out much of this range, and then right back to the lower end of the range on Friday. So I would anticipate whichever direction we do break to continue a little further. Even if we trade to the upside here, guys, this higher time frame 71.55 is a major resistance level, should absolutely be respected, and I want to make sure that you're aware of that. So that's what I have for the NASDAQ. And then the Dow, I'm going to go ahead and once again remove that extended session here. We have the halfway back that began Monday of last week. That low to high never really traded, so I want to be aware of that low to high going forward. That level is 24,813. Okay, so I do want to be aware of that. Now, if you have the extended session turned on, there's a totally different sequence. There is the low of Tuesday to high. And the reason we're looking at that is because Monday's low to high is what held, and then this low to high never traded. We just broke out. So right now I basically have an untested level, which I prefer to always look at first test rather than second test. 25,005. That's the zone that would be slightly below Friday's low, and as resistance we have a second test of 25,526 that I want to respect, as well as that is the beginning of the move down. So that is a resistance level 25,526 that I definitely respect on a second test at this point in time. So you can see I only have a couple levels here that I'm interested in, so it's obviously going to be one of those days that I'm a little more patient and just waiting for these higher time frame levels to trade. The ranges are still big here, guys. There's no need to rush into a trade. That is going to wrap up my morning trade plan. I'm going to share all my levels with you guys in the MLT Discord, and I'll catch you guys in there for the first bit of the day, and then I will be getting out of here, and I will see you guys on Thursday from Costa Rica, coming at you live. Thank you for your time here today. If you like this content, give me a thumbs up on my video. Subscribe to my YouTube channel if you haven't already, and have a wonderful week, guys.